Thank you all for joining us. We're excited for this conversation on wealth and AI. I'm joined by a great panel of folks who operated, built startups, sold startups, worked at big enterprises in the wealth space. So I'm really excited for this conversation. I've been looking forward to it all week. So let's jump in. Maybe we'll start off with introductions. Tim, we can start with you. Quick introductions, a little bit about you and your journey, and then we'll jump into the conversation. We'll try to keep it under a minute.
Can you hear me now? So Tim Baker, we are a sponsor. This is the first event we've ever sponsored as viaNexus. The short story is a year ago, myself and two founders acquired the assets of IEX Cloud. Some of you might have built your Fintech on that. I know if Pebble are here, they built some of their stuff on the IEX Cloud data. It's taken us a year, but we are coming out of stealth, and we've relaunched ourselves as a data platform, which now has an exciting agentic layer, so you can talk to the data sets. We build data sets like a real-time price, but we also partner with experts who are deep domain experts on certain data sets like earnings transcripts. We have MT News. So we're a data platform. We're great for fintechs. You can build with us, and we want to partner with you. Evan.
Right. Well, it's great to be here. I'm Evan Schnidman. So I am the head of Fidelity Labs. I don't even know how many FinTech Week events I've been to at this point. Probably, I think all of them. So I actually started my career as an academic, turned my academic research into my first startup. So I was analyzing central bank communications using natural language processing and applied that ultimately to analyzing a wide variety of market-moving language, so earnings calls, regulatory filings, things like that. Sold that business in 2019 and then spent the next 5 years running a fractional executive consulting business, working with early and growth stage fintech companies. So many companies that have been through the fintech sandbox, and so thrilled to be here. And now I am coming here in the capacity of my new role as the head of Fidelity Labs, where we get to incubate new businesses that will some of which will be the future of Fidelity, some of which will spin out and scale independently. And so just excited to be here and get to talk about AI and the future of the wealth space.
Good to see everyone. Dan Mercurio, Chief Operating Officer at Tandems. Tandems is a new brand for a company you may know as Sigfig. So we announced a new brand last week. I've been with the firm really since 2017, spent the first half of my career working in traditional banks, mainly on the East Coast, national, regional, and community banks. Jumped over to the fintech space and haven't looked back. Sigfig Tandems is a wealth tech provider. We work with large wealth managers, large banks, and insurance companies.
Hi, everyone. Thanks for your time today, participating in this event. My name is Biju. I am the head of FinTech Solutions at FCAT. FCAT, as some of you may know, is the innovation arm for Fidelity. We look at a 3, 5, 7-year horizon of the socioeconomic changes, the technology changes, and the regulatory changes that are likely to impact our business and guide the firm in that regard. As head of FinTech Solutions there, my job is a two-way street, work with interesting startups that may be beneficial to Fidelity as a larger firm, bring them in and give them a path. I'm also responsible for a platform that encourages and provides a way for folks that want to innovate in investing to drive their business. It's called Green Peer, and happy to be part of this conversation.
Thank you all for your time. Really excited for this conversation. So what we'll do is we'll first kick off with just innovation that the panelists are seeing in the ecosystem. Then we'll jump into how enterprises are thinking about AI, what are they building internally versus where they're partnering. And then we'll close off with just a little bit of a macro kind of regulatory, just given that AI in financial advice is something that brings a lot of attention from the regulators. So maybe to kick off, AI in wealth is no longer theoretical. We're starting to see many emerging AI-first startups that are being built in the space. What are the most compelling real-world use cases that you're seeing in the ecosystem? Tim, do you want to kick us off?
Yeah, sure. So I think like everything in this world we live in, it's moving very fast. But when I was thinking about the answer to this, I think there are kind of three levels. First one was informed with a conversation with an advisor at a Morningstar event a couple of years ago. And I asked her, are you using AI in your practice? Expecting her to say, no, it's too early. And she said, yeah, it's amazing. I just use ChatGPT and it gets me through the day. I've got more clients. So it gave her as an individual a productivity boost. So kind of personal productivity. I think we're all doing stuff that we couldn't have dreamed of doing a couple of years ago. The next layer we saw was product companies. I'm thinking of firms like Aladdin, for example, that put AI on top of a complex product. So I kind of gave that product ease of use, accessibility, and I think we're now seeing, everyone's now building a co-pilot on their their product. And now I think we're at this interesting phase where firms and companies, be they wealth platforms or customers, are building products that scale across their own business, that combine internal data that they have and building productivity at scale to drive insights, to enable advisors to sell the right product to the right person, for example. And I think that's where the challenge falls right now, and we'll talk about it a bit later, but that implies combining lots and lots of internal data sets that are all over the place with external data, which is all over the place. But we'll come back to that later.
Definitely. And Dan, you've been pretty close to the space with SigFig and previously. I guess, what innovation are you seeing? Where are you most excited about? And where do you think AI is going to have the most impact in wealth?
Yeah, thanks. Maybe I'll start and talk a little bit about some of the big trends that we're seeing our large partners try to tackle. I think the first really interesting industry problem within the wealth management space is the impending advisor shortage. So many of you have seen the McKinsey article that was recently written. By 2034, an estimated shortage of 100,000 advisors. Evan and I were chatting before the session. I think the stats around 42 or 43% of assets under management by advisors are going to retire in the next 10 years. It's significant. And so that's going to really leave what I think we're going to see as an advice gap. The number of people that actually need advice compared to the number of advisors available to give advice is a real problem that the industry is trying to solve. And so it does come back to productivity. How do advisors serve more clients at scale? We'll talk a little bit about what that looks like by market segment, I think later in the discussion. But I think that's the number one problem that I see our clients trying to tackle. How do we continue to scale advice delivery with confronting an impending advisor shortage?
Yeah, I'm excited to dig into that and the role of AI agents playing that. Evan and Biju, I know you have a lot of thoughts in this space. Would love to hear your thoughts as well.
Yeah, I guess I'll just piggyback on that last comment because I think it's not just the number of advisors, but the breadth of advisory services, right? Financial markets have gotten significantly more complex in recent years. People expect more out of their advisors than they ever have before, whether that's tax planning, estate planning, all of these other services that are now being bundled in or tacked on. And so the role of the advisor has changed. It's much more complex. So you have a shortage of people who are doing increasingly complex tasks. That means you, by definition, need a productivity increase. You need to augment their workflow in a way that essentially makes them superhuman.
Yeah, and coming back to your question on what we are seeing there, right? So where I come from, the elephant is a very commonly seen animal. And we have a saying about the elephant, it has different teeth to show and to eat. So AI in wealth management is on similar lines, right? So what we are eating today is one end of the spectrum, summarization. Plain, easy. That's what most of the work around is happening around. I think that will gradually go to Copilot for the shrinking advisor population. But really the holy grail there is hyper-personalization. So from the time that Henry Ford said, hey, you can have a Model T in any color as long as it's black, we've all been bucketed into middle-aged, aggressive portfolio or middle-aged, conservative portfolio or young, aggressive. I think it has to be a portfolio about you, right? Like Model T, it's Model U, right? And it should be portfolio for Abdul, portfolio for Biju, portfolio for Dan, and so on, right? I think that's where we'll go. As advisors are declining, maybe it's a good thing. We have AI taking that over to some extent. So that's the way.
Yeah, the infamous portfolio of one is coming.
I just want to respond to what Dan said. When I read that McKinsey report, which I think is probably right directionally, I was thinking about my financial advisor at UBS, who is showing no sign of retiring. I think he's nearly 70. So I think they are already significantly using AI to keep them productive.
The other industry that's growing is longevity, right? So
Exactly.
Amazing. And then maybe I want to come back and go a little bit deeper on the advisor side. One of the things we talked about was when it comes specifically to wealth advisory, where do you see AI playing a role? Obviously, there's a mass market that could use AI tools, whereas high net worth individuals might want personalized bespoke service. How do you see that shaping out with more AI tooling used by advisors?
Yeah, and I'll speak to it in the context of what we're seeing with our commercial customers. I think the primary focus has been around a better supporting a one-to-many advisor model for the mass affluent customer. A lot of people associate SigFig with robo-investing. That's actually where we started. But there was a time, everyone remembers, when robo was going to be the only way in which a mass market or mass affluent investor invested. We know that that's not true. We know that successful programs on the mass affluent side are some combination of digital advice and human supported in a hybrid way. But those programs have been really hard to scale profitably. And when you're not scaling a mass affluent program in a profitable way, you start to cannibalize your efforts on the affluent high net worth side of the business. And so you look at banks and wealth management firms that are trying to reach the mass affluent client base in a scalable way. They're deploying AI to do a few different things. First is prioritization around outreach. So if you're sitting with a book of business of 500, 800, we've seen some advisors with 1,000 clients in their books. How do you conduct outreach that is thoughtful and personalized to the right clients at the right time? Second is really orchestrating a more efficient meeting routine. And there's a lot of products out there in the market on meeting efficiency, we know that. But if you look at the amount of time that advisors spend preparing and conducting follow-up, whether or not they have a sales assistant or not, pre and post meeting, it's significant. And you compare that to the actual time they're in a meeting. How do you really reinvent how an advisor conducts the meeting life cycle with a client? And then lastly, all of the follow-up that's necessary from an activation and fulfillment standpoint. So being able to easily deploy an investment strategy once you have the client commitment, how can you do that in a seamless and connected way? Those are the big areas that we're seeing as opportunities to impact.
Just to pick up on that, I'd like to highlight something you didn't say, which is you barely touched on performance, right? Because, and this is one of the things that I think empirically matters a lot when we talk about the wealth space, which is that touch points matter. That if you look at satisfaction with your advisor, it is almost completely divorced from your financial performance. It is almost entirely based on engagement. So people who have worse performance but higher levels of engagement from their advisor rate their advisor more highly than people who have less engagement but better performance, which tells me that deploying AI in the space is all about engagement, which is exactly what you just hit on. And that's why, I mean, to me, I think it's fascinating. We're up here talking about wealth and investing. We're actually talking about essentially customer outreach.
And I think AI is that interesting solution that can help scale those touch points, right? Whenever there's something interesting that happens in your portfolio, AI can actually do some of the updates on that and keep you constantly in touch with your client while making the client feel like that this is directly from the advisor. And to your point, I think my day job is early stage investing at F Prime Capital, and we meet a lot of startups. And I was surprised to hear that advisors spend 2 hours for each, preparing and doing post-meeting account opening and different things versus for each hour that they spend with their clients. And things like, meeting notes, workflow tools that help automatically open accounts, things like that have really improved their efficiency. And we're starting to see those in the market now for the past, year to 18 months. Evan, I want to come back to you quickly on, what do you think AI will change the distribution model for wealth advisors? Where, how, when do you think that we'll start to see a shift there?
Yeah, I think this sort of is what I was getting at with my last comment, which is I think the distribution model changes considerably for a lot of reasons, not the least of which being the shortage we started out talking about. But I actually think that we're in an interesting. I hesitate to use the word regime change, but I think that it is a major shift demographically in terms of who is investing, what they want from their advisor, and what mode of engagement they expect. So a couple of years ago, I ran a series of roundtables with financial advisors, basically trying to assess how they would use a specific product. In this case, it was a product that could actually essentially automate their touch points to provide a customized output about what was going on in a client's portfolio. And sitting right next to each other were two advisors, one who was in his late 60s and one who was in his mid 30s. And their clientele almost identically reflected their demographics. The one who was in his late 60s said, I cannot reach out to my clients more than once a quarter or they will panic. Right? The one sitting next to him, who was in his 30s, mostly had clients who were entrepreneurs who'd recently had an exit. And he said, I have clients calling me 4 times a day to ask me advice on their options trades. Completely different demographics, completely different use case, completely different set of needs. And I think that speaks to where AI can come in customization for those completely different clients and those completely different use cases. And right now, that's not just, hey, we can improve your portfolio outcomes, like that's in some sense kind of a given. We can actually ingest more research, give you better information, more information. It's a question of, can you systematically reach out to people in ways that they will actually engage with, in ways they want, that improve their satisfaction with their advisor, and then result in them not churning from their advisor, investing more assets, and ultimately being that longstanding client.
Amazing. I want to change gears a little bit and kind of get into enterprise adoption. Obviously, a lot of startups are building in this space, but a lot of them their customers are enterprises. So, Biju, I want to start with you and, maybe touch on what is driving AI adoption by enterprises. Is it, client demand? Is it competitive pressures, internal cost-cutting initiatives, or some combination or something completely different that's, leading enterprises to really start thinking about adopting AI?
Absolutely. So, you want the honest answer or? Okay. So with everything new, there is FOMO, right? Maybe we start there. But the real driver is, in the future, there will be enterprises that adopted AI early and moved fast, and there'll be enterprises that didn't do that, right? So more than, is it back office, competition, price pressure? It's all of the above. But I look at a parallel with digitization, right? Banks used to have a paper form. In my business, an order ticket was written on paper, run with, to the teller and so on. And there are companies that adopted that, scaled their business, and over the 20-year period, I think it's like 5 to 7% boost to the global economy that digitization provided. I think AI will be a multiple factor of that, and smart companies understand that. Though it's a lot of challenges on the journey, but it's really about trying and trying till you succeed at this point, basically.
Anything you'd add?
Yeah, it's funny. We have a client that reminds me that the board and the management executive committee talks about AI being the number one priority, the most important thing, and then the other side of that conversation is the thing that scares the company the most. How do you balance that strategic desire to embrace, but with a real, at times, lack of focus on where do we start, where do we begin? And I think one of the most impactful things that selling into and supporting enterprise customers is put aside AI for a second and figure out the actual problems that you're trying to solve, really understand where the friction is, and then talk about solutioning versus, and I think we'll talk about this, kind of a spray and pray approach where you're just piloting solution after solution after solution. Really boil it down and work with those enterprise customers to find the real friction points within the interaction models.
Yeah. And continuing on that, I guess, what are some of the challenges when the enterprises start thinking about adopting AI? What are the challenges that they're starting to face? What are the hurdles you have to overcome? I think you started touching on the regulatory side, but more even from just the way that they have to structure their teams, their data, which we'll get to, Tim. I know you've talked about it, but what are some of the things that they need to do to be able to succeed in adopting the AI?
So I think the precursor to building a robust set of solutions, let's call it, for advisors or for self-directed investors, it all has to be underpinned by data. If you think about what we've just been talking about, to be able to personalize a service, you need to know what the client's total net worth is, when their net worth is spread across 7 brokerage accounts or fixed assets or complex financial services products.
Or private markets.
Or private markets. So data aggregation at that level. Then you've got to be able to understand the demographic of the family, right? Because we're not just broking an individual, it's the family. And then you've got trusts, and then you've got the age of the people. You've got the are the kids about to graduate or whatever. This is a massive data challenge. And then you've got market data. You've got everything in your CRM if you've got one. Many don't. And then you've got any number of other pieces of complexity, and none of that data is normalized. So if you stick AI on top of that, it's either going to be very, very slow or the output's going to be very, very bad. So it has to start with fixing the data problem. And this is why we're seeing, I think it was MIT came out and said 95% of corporate AI projects fail. I think a lot of them fail because of data.
To be fair, the sample size on that was 52 companies, so it was exactly an exhaustive.
And I think it was, I read it the other day, and it was actually the headline is a little bit misleading, but there, it talks about there being a gap between success, and they start to get into the reason, but data is definitely one of the primary causes for failure. And we've heard about hallucinations, and as soon as you've got an agent that's wandering around randomly looking for data, it'll find some data and it'll present it as a fact. So you're going to end up with some embarrassing outcomes. Now, AI is very, very good at then assembling all of that data into a beautiful report that's very convincing. But as soon as you put that in front of a client, they go, I don't even have any kids, or that's not my net worth, then the product's completely undermined.
And I guess, Tim, one area is piecing together the fragmented data, but then the other piece is also around what data should the agents have access to, which has PII versus which doesn't, and how are you advising organizations as they embark on that journey to figure out that data infrastructure and data structure that they need the LLMs to sit on top of?
So, I mean, we might talk about MCP and some of the technologies in a minute, but if you don't put proper controls around the data, be it PIA, PII, or market data. I mean, I think the big market data vendors love the idea of agents running around, hooking into a market data feed that it finds, and then a year later you've got an audit, and you're handing over $1 million to, I'm not going to name a company, but one of those companies. So I think the way that guardrails have been put in place so far have been layers and layers and layers of prompt engineering. And sorry, that's not AI in my book. So you've got to build this from the bottom up. And one of the things that we've been very lucky with the platform that we acquired is that our data is incredibly well described and normalized. So sticking an MCP server on top of that and then having an agent integrating OAuth into that provides a very secure outcome. But I don't think that many enterprises have got that level of, because they've been put together through a dozen acquisitions in the last 10 years. So there's a lot of spaghetti to kind of work through.
And Evan, I know sandbox environments are one way to start trying and testing this, but how are enterprises thinking about actually leveraging, the AI solutions that are out there? Can you talk a little about the enterprise perspective on beginning to at least take the steps towards that?
Very, very carefully, right? That is how enterprises are thinking about implementing AI, right? And mostly because of the PII issues, mostly because of making, I would say it is a belt and suspenders approach, right? Being extremely cautious and conservative about how do we utilize AI without exposing client information? How do we make sure that the guardrails are in place, that there is no way for us to end up with millions of additional spend, right? But really, it ultimately, it boils down to not just how do we test this and make sure that we're not exposing our own information, client information, or worse yet, giving away the information to have it train someone else's system, right? There's a lot of questions we could address around that. But ultimately, the question becomes then, what does the adoption curve look like? Because you can't test forever and let perfect be the enemy of good. At some point, you have to say, we're gonna fall behind if we don't have access to these tools. And that's where groups like FCAT, like Labs exist in Fidelity, where we are hived off. We have systems that allow us to operate a little bit independently. Not totally, but enough that we are not touching the client data, that we are not touching the information that could be dangerous to expose. And I think that's how a lot of other enterprises are approaching it, is that they have a sandbox environment, that they are actually segmenting that off. They're siloing the use case for AI into whether it's one sleeve of a business or one specific product or one hived off team. Ultimately, that has to be the answer. That's not a long-standing solution. And the bigger question becomes, what does enterprise-wide adoption look like at scale? And to some extent, we don't know yet. We've seen that in some consumer-facing businesses, and I don't know about you, but I've never, still to this day, haven't used a chatbot for customer support that I'm happy with, right? So I don't think we're there with widespread usage on those types of applications just yet.
Yeah, and one of the additional things we've tried is, you see a startup that is very interesting, you want to partner, and then there's no way to send the data out. So models where we can install internally as an enterprise and just get started, that gives us some way to progress. Of course, always finding low-risk use cases to start this, get the machinery in place, how you're going to evaluate, how you're going to manage, how you're going to monitor, and then make the next step, basically. That's the way.
Biju, I'm curious from your perspective, are you finding that enterprise adoption broadly, not just at Fidelity, but just more broadly in general, is AI adoption at enterprises, is that keeping pace? Do you think it's accelerating? Where are we in the adoption curve for enterprises and AI?
So initially there was the fear reaction, right? And I'm talking maybe 18, 24 months back. Hey, nobody should be touching this stuff. We don't know how the data flows out and so on. And then gradually there are these champions within that move forward. And This is more, I'm talking of LLM and that kind of technology. Machine learning has always been there as part of enterprises. But now there is a realization that we need this, and there's active encouragement, and there's certainly at FCAT, we're always trying, whether permitted or otherwise, but now we see the active encouragement to move this forward. And I think our clients are also asking for this. So
I think it's also worth note that there's a distinction here between adoption of LLMs and some of the generative AI that we're using versus what is effectively glorified Bayesian statistics, which has been in widespread use in machine learning applications for 20 years.
absolutely.
Good clarification. And that's a perfect segue to, there's a lot of founders in the audience who are building AI solutions. And Evan, I would love to, as someone who has built and sold an AI startup in a prior life, can you give a brief overview of like how selling AI tools to financial institutions has evolved over the past decade, and any advice that you have for entrepreneurs in the audience that are working to actually get that first, contract or pilot going with an enterprise?
Yeah, for sure. So I launched an AI startup in 2014. What at the time, the term alternative data didn't exist. So I launched an alt data company before the term alt data existed, which was fun. And so it was not just an exercise in convincing people that our methodology was legitimate and that actually the output, the data we were supplying, was actually useful. We also had to go through the complex explanation of, here's why this works, and no, your top quants aren't going to understand that at, pick your hedge fund here, right? They aren't educated in this, right? This is cutting edge technology. And so all the way up to and including, we started as an API only business in 2014 and had a whole bunch of financial institutions say, great, can you deliver us a flat file or FTP, right? Now, an MCP server is a worlds apart from where we were, 10, 12 years ago, right? And so I think the world has shifted in terms of people's comfort and familiarity with at least the data side of the AI equation. The problem is that actually budgets are quite a bit different now. And what has happened over the last decade or so is that data budgets, technology budgets, AI budgets now have grown, but not nearly as quickly as the number of data sets, tools, technologies have proliferated. So the price you're getting per sale, right, your average contract value, has come down considerably. So from a go-to-market approach standpoint, you have to be thinking about what is that LTV to CAC equation? What is the lifetime value of that customer relative to the customer acquisition cost? And unfortunately, your customer acquisition costs have to come down because your lifetime values come down by definition. And so as companies are willing to spend less on data and AI tools, they're going you're going to have to figure out a more effective go-to-market solution. The last few years, there's been a lot of talk about, can we just wave a magic wand and people will come to us, right? We'll just put a chatbot out there and they'll come in, right? That doesn't really work unless you have a network-based tool, right? Unless you have a tool where there's some sort of collaboration between users. And so from a go-to-market standpoint, the challenge now is, can you figure out a large enough addressable market that is very broad, that has the same problem? And this goes back to what you were saying before, right? The problem question, instead of these solutions in search of a problem, you actually have to be very, very focused on, you are solving this extremely targeted thing, and then grow the business from there. Because right now, there's too many solutions out there that are in search of problems, and they aren't gonna there just isn't enough budget out there to spend on that.
I would also say something that I see is, you have more success when you can start to unify business owners within a large FI, business line owners within a large FI, with the AI champion cohorts or centers of excellence that are being established. Because for a while there, they were running completely independent of each other. So business problems being solved by the business owners, and then a lot of exploration happening at the COI level. And the more you can bring those two groups together and actually force at the same table good discussion between centralized AI champions and the business line managers that are running the day-to-day business, you can start to find the real problems that we as tech providers can help solve. And I think the more that happens, the better for everyone.
Well, and to go back to where we were before too, I mean, I think when push comes to shove, when, like, to use a really concrete example, when Thomas Edison rolled out electricity, he didn't walk into people's homes and say, like, we're going to put in overhead lighting, right? He walked in and put in lights where their kerosene lamps were, right? It was a very specific thing of, we're going to solve the exact problem of people don't care how the light gets generated. They just need light, right? People don't care if there are 1,000 people behind your solution or if there's one person with AI. They just need their problem solved.
Yeah, and I think, Dan, you actually answered my other question, which was around just moving from, pilot phases and overcoming pilot fatigue. But I think you already kind of touched on that.
Yeah, and I think
it has a lot to do with
Evan's exactly right. I mean, I think if you're working with a business owner within a large FI and you start really understanding advisor journeys, client journeys, and then start to imagine a world without the friction in those journeys that you're experiencing, you can then find very, very quickly identify point solutions to get started. You're not reinventing the whole thing overnight, but you're finding one phase of that journey that you can make better. And then AI solves for it, but you're not out looking for an AI solution. You're out looking to fix that friction point.
Yeah. No, well said.
And just one basic thing to add to this. This is, very fundamental, but when you're going to pitch an AI tool, make sure you have the tools to measure the accuracy of that tool, right? It's a big problem, how do I know it's accurate? How do I know it's accurate over a period of time? And sometimes we meet startups that have a brilliant solution, but we then have to work with them to figure out how we operate it. So that's another piece, the trust element has to come with the solution.
Yep, totally agree. Maybe switching gears, I know we're almost at time, but would love to touch on, in your opinions, what are the biggest regulatory headwinds facing the adoption of AI, especially in a regulated industry like finance? Tim, do you want to kick us off with this one?
Yeah, look, we live in a very regulated industry. At the end of the day, you can sue a financial advisor if they give you misleading or bad advice. You can't really sue an agent, but I guess you could go after the company. So I think regulations have to kind of catch up. We are ultimately going to be advised and guided by agents more and more. There's no escaping that. So I think we're in a tricky position where regulators, by definition, are slow-moving. I think we have an administration here that's allowing a lot of flexibility. I think you go to Europe, there's a lot more tighter control around AI than there is here, which I think is great because it's helping innovation, but we're going to make a whole bunch of mistakes along the way. We also live in a very legal, litigious, environment as well. So when that first lawsuit happens, or when one of those big vendor goes and says, hey, your agent's been consuming all that data, then we'll probably all have to pause a minute and rethink.
I think there's an interesting parallel here, which is the only two industries that are this highly regulated, there's this tight a control on data, are finance and healthcare, right? Every other industry in the world can kind of mess this up, and like the margin for error is much, much broader, right? You're 98% accurate in a consumer-facing business, you're probably fine. You're 98% accurate in like a surgical diagnosis or in a trade, you're either someone's going to die or you're going to get sued, right? Like that's how this works. And so as you think about this from the startup landscape, as you think about this from sort of the broader fintech environment, don't try pulling people with skills out of consumer-facing AI tools and expect them to plug into financial services, especially B2B fintech, like enterprise grade. It's not going to work because the margin for error is so small. And to Biju's point, like you need to know how accurate your models are. And so we've seen AI deployed in radiology for over a decade now. we still don't see people being diagnosed purely by AI, even though the AI is better than 90+% of radiologists and has been for years, right? Because no one can, to Tim's point, no one can sue the AI. And so until the regulation catches up on that, I think we're going to have to be really smart about making sure that we're really careful about what people we're bringing into the enterprise fintech world.
I think that's why we're seeing a lot of the use cases, and there's a bunch of people here who are developing tools to help research analysts cover twice as many stocks, or junior bankers get through the day. Those kind of productivity tools are much safer. By definition, you've got a human in the loop. They're well understood patterns of usage. And LLMs are very good at that. They're getting better, and this is where, MCP. Everyone know what an MCP is? Yeah, good. If you don't, look it up. That's helping data connect more effectively to language. Language models don't understand numbers. So we're seeing a lot of really positive steps forwards, but we've still got a bit of a journey to go. So the human in the loop is probably going to be the safety valve for now.
Definitely makes a lot of sense.
I was just about to say human in the loop, and that's an oxymoron with AI, right? But
it risks a little bit. Well, this has been a delightful conversation, very insightful. Thank you all for joining the panel and sharing your insights with us, and thank you all for attending. Let's give it up to the panelists.